All right, yes. So we are approaching the end of this current enrollment month. We have gone over everything that we need to go over. Of course, we have this episode left, and then we have another episode left as well, which will be the outro. Now, if you followed along with the videos, etc., then you know what it takes to create a training plan. You likely already have an idea. All right, I have this training plan. You know how to combat your psychology in a sense. So how to master your psychology, how to master your training plan. Now, what is next? How can we actually improve that training plan and build onto that foundation that we have right now? So what you're seeing here is, again, we have this trading dashboard right here. Then if we go to journal, that is where we want to start building. So in our journal, again, this is pretty self-explanatory. In our journal, we want to write down, all right, what happened during a day? How did I perform as well? So psychology journal, weekly analysis, weekly journal, etc. You can explore this all you want. If you click here, you get a new month, new week, trading journal, weekly review, psychology journal, all these pages that you need right there. Now, the most important part here is the journal is important. Yes, that is important. Now, let me guide you through my process, what I do after I take a trade. So after I take a trade and the outcome is either a break even, a loss, or a win, the first thing I want to do is I want to go into this calendar right here that we're seeing in the Notion, and I press on the add an item right there, and I just name it however much the trade is, trade 56 right there, and it was a loss. Let's say it was a loss. Then I fill in the status, loss right there, a pair, the pair I was trading, the instrument I was trading, the setup I took. The setup for me is delirium. So that's just my trading plan, a name right there. Then the RR, -1, stuck to the plan. Of course, that is an important one for you and for us in general. If we stuck to the plan, yes, then it's fine. If we didn't stuck to the plan, so we didn't stick to the plan, that is important. So let's say no, we didn't stick to the plan. Now the high time frame markups, you can fill them in here, or you can also fill them in the journal that we just saw. Or what you can also do is what I like to do, and what I'm doing inside the mentorship as well already, is through videos, I'm already journaling. So through my own videos, I am already journaling my trades, etc., which are very helpful because then my thoughts are out there in a video. And what I would advise to do is, if you can do it, try to record yourself as well and try to speak to yourself through videos. Again, you don't need to share them with anyone or everyone or whatever you want. You can keep them to yourself, but that is very beneficial. And when I started doing that, and that was already maybe at the start of my trading journey, I started recording myself, and I just noticed that all my thoughts came out more so than when I was typing, etc. So that was very beneficial for me. So if you feel like doing that, going over your own trade and recording that, then that is something you can do. You can use a Zoom program, which is free. You can record for 45 minutes maximum. You can use OBS, which is completely free as well, which you can use. So feel free to experiment with that, etc. So here you can fill in the markups right there. Your MT4 screenshot if you feel like it. Feelings, these are important. So how did you feel during the trade? That is important. And of course, if you didn't stick to the plan, then that feeling part will, of course, be very important, because then there's likely some emotion right there. Why didn't we stick to the plan, etc.? Were we fearful? Were we angry maybe? Were we overtrading, etc.? And then some comments. So write everything that comes to mind right there. That is something I would love for you to do. And then again, I have just a little reminder. This is also the injecting logic part. A loss doesn't determine the monthly outcome. Stay focused and look for those high probability trades. The RR has got your back. And the reason why I also want to journal immediately after I take a loss, win, or break even, because every time I journal right here, and what you can see, it breaks a cycle. Because when I fill in a win as well, then don't be too euphoric after win. Stay focused and look for those high probability trades. So every time I take a trade, no matter the outcome, I get a reality check by myself because I'm journaling. So it's sort of a cycle for me that I take a trade, whatever happens, loss, win, break even, I journal. And that breaks the cycle of me looking at the chart, going over another trade opportunity, etc. So that is very important for me. That is extremely crucial in my trading as well. So this is also, I think, pretty self-explanatory, but the reason behind it is very important, I think. It's because you're breaking that cycle for looking at another trade opportunity, because you actually need to open the Notion program, or maybe your textbook where you're writing, etc. Or maybe start a recording and start your journal recording, etc., etc. And it breaks that trading cycle that you're in of looking now at a new trade, need to do this, need to do that. No, first thing you do is journal, journal, journal. That is the first thing you want to do. So then the most important part, or well, I think they're equally as important. I don't think one is more important than the other, of course, but this data section is extremely important as well. So if we move to the data section right there, and we move to, I call it scalp model right there, just you can call it however you want to, of course. Then here, after every week, so on a Saturday, on a Sunday, whenever you have the time, of course, it's also good to take a complete day off. So maybe on a Sunday, you can fill in your data right here, that you the trade that you actually caught during the week. That is very important. As well, if you missed some trades, then a great idea is as well that you copy it. You copy it like Ctrl-C, Ctrl-V, and you fill in another one of potentially missed trades, including the trades you also took. And why is that important? Because it is important for us to notice if we are living or we are performing our trading plan at the fullest potential. So what I mean by that is sometimes the trading plan works, but we don't work. As in, we are missing trades. We are only taking the losses, for example, in the trading plan, and we miss out on the winners. That's a lot of times what you'll see with when you're trying to follow another person's trading plan or something, or you try to copy someone. What usually happens, and I'm talking from my own experience, way back in the time when I used to copy someone or copy someone's trading plans, I would only copy their losses and never took their winners, for example. I think we can all relate to that at some point in our trading career, which is why we want to be the individual trader. Because if we are copying someone, we are not taking all their winners. We might not also take all their losses, etc. So that is very difficult, right? And when that happens, you are not performing at your trading plan's fullest potential, full potential. That is very dangerous. So for me as well, of course, I miss trades. And that is very important for me to note down as well. When I miss trades, why did I miss the trade? Was I looking at something else, etc.? Why did I miss that certain trade? That is extremely important for me to realize. Because then, if I'm not making profit, I can still reassure myself, all right, the trading plan is actually profitable, but I'm not profitable because I'm not performing at my best. That is very important. And that is a big mistake from my own experience. It's a huge mistake that I made, that I thought the trading plan wasn't working, but I wasn't working. And that is very important to understand as well. So you need to get that in perspective. All right, I could have caught 6R this week, but I only caught 2. Did I miss something? Did all those opportunities happen on the same day? Then it's not that bad, right? Then it's nothing to worry about. Did all those opportunities happen at different days? Why did I miss those opportunities? Was I looking at another pair, at another instrument, etc.? That is all things you want to be noting down, of course. So how do you actually use that? You can use the flow trading plan. It's more so easy because you're focused on one instrument. Filtering process, then it becomes a little bit more difficult. What I do is I go over my interest list, see if I missed something, etc. See what I was trying to look at. Now, how can we use the data as well to potentially improve our trading plan or improve our trading in general? Because we don't necessarily use the data. This is important to understand. We don't necessarily use the data to get a 100% win rate in our trading plan, in our mechanical approach, etc. That's not really necessary because the approach we already have, that is perfectly fine. But what we do want to do is potentially look at unnecessary things in our trading plan. So for example, what does that look like? If we, again, let me remove this one. If we go through to our scalp model right here and we fill in the pair, and we fill in the date that we took a trade, how many minutes it was open, the month, the date, that all goes automatic right there. Then the result, the win rate, the RR, the potential, SL, direction, etc. Pretty self-explanatory, right? Now, this is interesting because this is what I used to do right there. I used to note down Asia, confluences right there, logical targets. Did it reach that logical target? So the context high or low, for example, from where are you trading? So what is happening, etc. Give a quick little story. What is the liquidity we are taking, for example, nodes, discoveries. Now, after gathering a lot of data, I noticed that Asia right there, consolidation Asia, volatile Asia, classic protraction, delay protraction, I noticed that eventually it was irrelevant. And that is exactly how eventually I got to the trading plans that we are using right here in the mentorship, because through data, etc., through discoveries, everything I noticed was irrelevant. As in, the Asia was irrelevant. A lot of confluences right there were irrelevant. We were in a manipulation phase, the AM phase, the power of 3, etc. All these things, SMT divergence, 3 drives pattern, they were all irrelevant. And that was gathered through my data. So that was eventually, of course, backed up by logic. So yes, we have logic, but ideally, of course, we want logic to be backed up by some kind of data. That is what we want to have. So it's not just we think of something, and that's a huge part of the trading industry nowadays, where people have their logic, but it's not backed up by anything. So yes, it's great logic. I love the logic, and the logic can be very fancy. But if it's not backed up by anything, then yes, of course, it's very futile and we can't really work with anything. So this is important. And then as well, you can note down, all right, in which session did I take the trade? So London Open, New York AM, New York PM, etc. That is very important to note down, because from my data, I noticed I perform better in London than in New York. And as well, I do take more losses in London, but that is because I don't take a lot of trades in New York, because I tend to miss those trades, which is very funny. So I take more losses in London, but I am actually focused on catching the valid trades in London. Whereas in New York, I might miss it because I'm not that focused. I don't have the energy anymore, etc. So that is very interesting. So that is how you can build onto that. And then again, we want to keep on reminding ourselves. We want to ideally remove rules, not add rules. That is also very important. So this is how you journal. This is how you gather data, etc. And then from there on, you can work. Now, again, it is important to understand that data gathering is something, an ongoing process, as in it continuously happens, and it is very important, again, for us to gather data in the first place and to journal, etc. We're not changing anything. If we constantly change our trading strategy, constantly change our trading plan, then of course it won't work. So that is very important as well. So if you do want to change anything, then you need a big trading sample size. That is very important. And then I'll send you to the next episode, which will be the outro. All right, perfect. Thank you.